Good morning, everyone. We are so excited for you to join us today. We are going to be talking about fiscal sponsors and fiscal sponsorship here with a wonderful panel. I'm Mckenzi Swinehart. I am the Grants and Services Manager here at the Greater Columbus Arts Council, and I'll be moderating the discussion. And we like to start all of our meetings with a land acknowledgement. So I want to say the Greater Columbus Arts Council collectively acknowledges that the land we are positioned on is the traditional, ancestral, and contemporary lands of Indigenous people. We reside on land that was cared for and called home by the Kaskaskia, Shawandas, Tula, Shawnee, and the Miamia people and their ancestors. By offering this land acknowledgement, we affirm tribal sovereignty and will work to be accountable to the American Indian peoples and nations. So I just want to say again, thank you for joining us, and we're going to get started. We're going to do a bunch of question and answer through our panel, and then we will actually take questions from the crowd at the end. But if you have a question that pops into your head as we're chatting, go ahead and drop it into chat, and I will make sure that that question gets addressed. So and we'll also make this recording available to everyone who attended after the panel. So I'm going to throw it over for introductions from our panel. Let's go to Brad first.
Good morning. I'm Brad Britton. My inflated title here at the Columbus Foundation is Director of Planned Giving and General Counsel. So partly I work with our donors and their attorneys, accountants, financial planners on their charitable gift and estate planning to create either currently or in the future some sort of charitable fund with us to carry out their charitable wishes. My other hat is that I'm in-house legal counsel, so giving legal advice to our board, our staff members. Been here 25 and a half years. Happy to be participating today and learning from my fellow panelists.
All right, Jessica, you're up.
Thank you. Hi, I'm Jessica Johnson, CEO of Accounting Solutions of Ohio. Work with businesses, nonprofits, helping with financial and accounting. I have an accounting and finance background, helping with just creating the documentation and financials and accounting that are needed for the nonprofits and businesses, as well as doing analytics that are required to help to grow the business.
And Teresa, certainly last but not least.
Thank you very much. I'm Teresa Trost. I am the Executive Director of Community Shares of Mid-Ohio, which means that anything that anybody else doesn't want to do lands on my desk, which is always the case. But been doing this job here for 11 years, and I see one of my board members online, but I have announced that I'm retiring at the end of next June. So it's been a good ride, a long ride. Community Shares. We kind of divide our business into two halves of our company. One half is membership by nonprofit organizations that we represent in combined charitable campaigns. Many of them you will hear referred to as United Way campaigns. We participate in all that on behalf of our members. 6 years ago, we started a social enterprise, which is comprised of compliance reporting services for nonprofits. So if you would choose to want someone else to take care of filing your Attorney General report, check on all of your Secretary of State, your licenses and so forth, we can do that. The other part of that is the fiscal sponsorship, which we have grown to, I think we're sponsoring 15 projects right now and looking to grow that even further. So, and I want to thank GCAC for having me on this call. I appreciate it.
We are super excited to have so many folks here today and folks interested. Fiscal sponsorship comes up a lot here at GCAC because you might know, and one of the reasons you might be on this call is because GCAC actually allows you to apply for some of our grants, notably the Project Support Grant and the Thrive Grant via fiscal sponsorship. So I'm sure that's one of the reasons that a lot of folks are here, as well as our nonprofits are looking for those best practices to implement fiscal sponsorship. So we're going to dive right in and just start off with What is fiscal sponsorship? And we're all kind of referencing this super exciting book called Fiscal Sponsorship, 6 Ways to Do It Right. GCAC has a number of copies at our office. So I will be giving some of these out, as well as lending some out. So you'll get a follow-up email. But this is sort of the Bible on fiscal sponsorship. And it's not as dry as it sounds. I did actually get through it. Just so you know, there will be a reference for you later. But let's just go in. There are multiple models of fiscal sponsorship. A lot of times people get fiscal sponsor and fiscal agent confused. So what's fiscal sponsorship? Let's start with Brad.
Sure, thank you. And I will just reiterate, this is the Bible. If you just Google fiscal sponsorship, 6 ways to do it right by one of the co-authors is Gregory Colvin, C-O-L-V-I-N. I would say, and they really have created the language around fiscal sponsorship that's widely used across the country. I'm not on commission, by the way, and it's only like $30. So if Mckenzi and GCAC run out, spend $30. And I would say if you're not willing to read this cover to cover, then you shouldn't be acting as a fiscal sponsor and you shouldn't look to be sponsored. It's just a bit more than 100 pages long. It's written by lawyers, but blessedly, it's not written just for lawyers. It's written for everybody. And I think they've done a beautiful job of explaining the legal standards and with a lot of practical knowledge too. So it really is, if you don't hear anything else today, you can just read this book and you'll be set well. So anyway, let me just set the table. What is fiscal sponsorship? Well, it's a situation where a tax-exempt organization, typically a charity, takes contributions for purposes of a project that's spearheaded by somebody outside that charity. It could be an individual or an organization, a project that furthers the fiscal sponsor's own charitable purposes. And these project leaders are going to operate the project. They enter into an agreement with the fiscal sponsor, should be in writing, under which the sponsor agrees to receive tax-deductible contributions, and that's kind of the sizzle on the steak here for donors and funders. Tax-deductible contributions that are designated for the project's charitable purposes. It gives the project access to those contributions that under the sponsor's oversight, and typically has the sponsor providing administrative, logistical support for the project. And in return, the project agrees to use the funding from the sponsor to perform the charitable program it's proposed. And a key thing here is the sponsor can't just be a passive conduit that funnels gifts from outside contributors to the project, or else the tax deductibility of the contributors' gifts is lost, or if it's a foundation, they can run into problems. So it only works, fiscal sponsorship only works for tax purposes because the sponsoring charities in the so-called driver's seat, it's responsible for it, legally in control of the gifts raised for the charitable purposes that the project is pursuing. So, if you're involved in a project seeking fiscal sponsorship, say you want to run a community garden or you have an arts program, something like that, and you find a potential sponsor, say GCAC, Community Shares of Mid-Ohio, that says we got to be in ultimate control here. This is not a power play by them. This is not just them yanking your chain or being the 800-pound gorilla. It's an absolutely necessary feature of proper fiscal sponsorship under the tax law. This is the word you'll hear from me a lot today that you'll read, and I didn't make this up, that you'll read in our Bible here is the sponsor has to have discretion and control. Do you want me, Mckenzi, to jump into the terminology about fiscal agency versus fiscal sponsorship? Or
absolutely, because I think I hear a lot of people say fiscal agent when they mean fiscal sponsor. So you'll see, for everyone who's looked at our guidelines and have worked with GCAC, we always use the term fiscal sponsor because we mean fiscal sponsor when we're talking about it. So Brad, take us away. Fiscal sponsor versus fiscal agent.
One takeaway here today, if you stop using the word fiscal agent, do not use that word. It describes the relationship inappropriately. So forgive me for getting a little boring here, but there's the law of agency that applies here. So under the law of agency, an agent acts on behalf of another that's called the principal, and the principal has the right to direct and control the activities of the agent. So if you call the charity involved in what's supposed to be a fiscal sponsorship situation, if you call them a fiscal agent, that suggests that the project controls the charity. Well, it has to be to comply with the standards under the law for tax exempt organizations like charities, the relationship has to be the other way around, has to be the inverse. The charity has to be in the controlling position, and the kind of non-exempt, non-tax exempt project, you know, typically the whole reason for this is the project people haven't formed a charity themselves. They have to act so as to further the charities, the sponsors, charitable position. So we use that term fiscal sponsorship. I know Teresa uses it. I'd love to hear her war stories about, you know, getting people to understand that. And again, the problem is if you're not using the right words, the IRS might deem this to be just a conduit, you know, from the sponsor off to the project, and say, well, okay, if that's the case, then there's no discretion and control, no tax deduction is allowed by individual or business donors. Funders like foundations suddenly have to have all kinds of legal issues. So maybe the best way to illustrate it, and I will be shutting up here in a second because I want to hear from my colleagues on the panel. But I don't know, I might be dating myself here, but does anybody remember George Carlin, the comedian? Anyone? Raise your hand. Okay. He died a while ago, but he had this funny routine where he compared baseball and football. You know, and football was one of these things, and baseball was a much more light, pleasurable activity. So he would talk about, you know, in football you wear a helmet, in baseball you wear a cap. Football you have penalties, in baseball you have errors, or in football you play on a gridiron. In baseball you play on a diamond. So this is kind of like a compare and contrast for terminology here. So the wrong terminology again is fiscal agent, say fiscal sponsor. The wrong terminology is that a gift is earmarked for a project. Instead, you want to say that it's in support of the purposes of Project X. The wrong terminology is saying that the sponsor is acting as a conduit. The right terminology is to say the sponsor is exercising discretion and control. Don't say pass-through. Say, for instance, regrant. Don't say funnel. Say platform. Don't say laundering, like money laundering. Never, right? You could say incubator. Don't say that the sponsor is a go-between. Say it's a steward. So just examples of how terminology matters. If the IRS is ever looking at this, you know, it could be important to have that right terminology. All right. Well, that's enough of me for the moment. Pass it back to you, Mckenzi. I can talk about the models whenever you like.
That's great. Well, I think the models are going to dovetail right into our next part of the conversation. We're going to talk about what the responsibilities are of a fiscal sponsor. So for the nonprofits who are thinking about or have served as fiscal sponsors, this is like definitely zoom in on this. One thing we see is that not everyone knows what they're taking on when they're becoming a fiscal sponsor. So we're going to throw it to Teresa to talk about the responsibilities of fiscal sponsors. And in our special book, when it says 6 ways to do it right, there's actually 6 models primarily. And what we see is just 2 models are most typically used: Model A, which is comprehensive, and Model C, which is short-term or one-time projects. So for GCAC, we see a lot of Model C. Teresa runs a lot of Model A. So we're going to just talk kind of mostly about those 2 models for when you read the book, focus in on those. And let's just talk about what is the primary responsibilities of fiscal sponsor. If someone says, hey, Teresa, I want you to be my fiscal sponsor, what do you have to think about?
Thank you, Mckenzi. And I will echo everything that Brad said. There are a lot of horror stories, and another time, if you want to hear them, that's great. Model A is considered a comprehensive or a full sponsorship. When we look at a project, when we have a project make application to become sponsored, the first thing we look for is mission fit. You're probably going to hear this from GCAC as well. Because we operate a model, we appeal to a broad base of nonprofits, whether it's in the arts community or whether it's in the animal and animal rights community, LGBTQI community. There are a number of different missions that fit within our mission. So that's the first thing we look at is mission fit. The second thing we look at is, do they have their ducks in a row? We require that a project has an advisory team. And you'll notice I call it a team, not a council, not a committee, not a commission, not a board. It is an advisory team that helps the project leader. And project, by the way, is a universal term in our world. I have a lot of people come at me and say, well, no, we're registered as a nonprofit corporation. You're not tax exempt. Therefore, if you're applying for sponsorship, you are a project. It's not a power thing. You just are a project. Project leaders and a project team. The next thing we look at is the full description of what a project is. What is it going to do? How are they going to know it's successful? It's, as I've been told, pretty much by the time you get through our application, you have written your first grant, because we ask for many of the same elements that are asked for in a grant situation. We also require a preliminary budget, and we realize with a lot of these, there are startups or incubators. So budgets are, as I call them, best guess estimates at any point in time. But we do require a fully thought out budget. And by that, I mean, what are the possibilities? Can't cover them all, but my advisory council wants to see that you've thought through the entire project. From there, once an agreement is signed, we as the sponsor take on all of what we call the back office. All funds come directly to us. We pay all of the bills, reimbursements, deposits, so forth. The project manager gets a profit and loss statement every month as to what they have had this come in and what's been paid out. I meet with my project managers on a quarterly basis just to find out, how are you doing? What's going on? Did this work? Did this not work? What's the next step? I'm required to approve any and all materials, whether that is a fundraising marketing material piece or whether it's an annual report that they want to put out. I'm required to review all of those because they must have community share / informs name on them as the fiscal sponsor. That's to let any donors know that, yes, the money that's going to them comes through us, and that when they see our name, it's not a mistake. So that is part of it. I'm required in my exercise of discretion and control, and you hear that from me a lot too, is to review any lease, any contract, any agreement with any outside vendor, any of those things. If you're doing a fundraiser and you're going to rent a tent and it's an agreement to hold harmless, I'm required to review that and to sign off on it, because the project is operating as a program of community shares, and I'm the only authorized signer for community shares. Once an application is made, I know I just drifted back a little bit. I do not make the decisions about who is fiscally sponsored. We have a 6-person advisory council that reports to our board of trustees as the fiduciary responsible party. So our council reviews the application, sometimes talks with the project leader, sometimes asks for additional information. Their decision then is handed over to our board of trustees for a final decision. After that, it's the reporting back and forth, an annual report from our projects. Like I said, what did you set as your goals? What were your outcomes? How did you do? What can we do better? Do you want to move forward? Do you want to call it here that you're done? You know, what's that look like? So that again is a part of the discretion and control of the project. Project leader will do the fundraising, will actually perform the activities of the project, but all else is given over to the discretion and control of the sponsor.
That's great. That's a real understanding of comprehensive. Does anyone want to jump in and talk about Model C, the pre-approved grant relationship? That might be a shorter term. So it might be, so if you're an artist who is, let's say, doing a one-day festival, and you're just coming together with a group of artists and you're running a one-day festival and then you're discontinuing. So you're not like operating as a long-term, almost like a program of an organization, but you're just coming together for that one case. You might use Model C, which is called the pre-approved grant relationship. And that's where we see most commonly in project support. Brad, do you want to jump in and talk a little bit about Model C?
Sure. So just to compare and contrast, Model A is the kind of, I think Teresa used the word all-encompassing. So the project is entirely inside of the fiscal sponsor organization. Its employees or volunteers are running it. The project has no separate legal existence, allows for the most control by the sponsor. Project, all the expenses are paid directly by the sponsor to vendors and suppliers. Any bank account is owned by the sponsor. The sponsor is ultimately responsible for payroll tax reporting, withholding, workers' employment benefits, personnel policies, just like for any other employees. Any gifts come directly to the sponsor, and so as Teresa pointing out, the sponsor needs to review any fundraising materials. We talk sometimes in Model A, and I'm doing this to contrast the Model C, but we talk sometimes about an admin fee. With Model A, really, it's because the project is entirely inside of the fiscal sponsor. It's just that the admin fees it's not really a fee because it's assets that the sponsor already owns. The liabilities are those of the sponsor. The sponsorship owns any property that's created, like intellectual property, tax reporting. The project is entirely on the fiscal sponsor's own IRS Form 990. Any financial transactions go through the fiscal sponsor's planning system. The fiscal sponsor does payroll tax returns. So it's really, just think of it, like Teresa said, as all encompassing. Okay, so contrast Model C. Now, Model C is not the Wild West. It's not like, woohoo, we're Model C, we're home free, we can do whatever we want on the end of the project, just because we're not inside the legal entity of the sponsor. Like Mckenzi said, it's the so-called pre-approved grant relationship or grantor-grantee relationship. Gregory Colvin, the attorney who wrote the Bible, here he calls it the most widespread and most misunderstood version of fiscal sponsorship. So the issue is with this one, the danger is that if the fiscal sponsor doesn't exercise the necessary discretion and control, the IRS can collapse the whole arrangement into a kind of a conduit and disregard the role of the organization and the charity that's supposed to be the sponsor. And then the result is the donor doesn't get a tax deduction, and a grant-making foundation has to exercise expenditure responsibility, which is a whole additional level of due diligence and reporting that they don't have to do if they're making a grant to a truly correctly run fiscal sponsor. So again, this is not us, Teresa, Jessica, Mckenzi, GCAC, Community Shares of Mid-Ohio, making these rules up. This is coming down to us from the tax law and our overlords in Washington. So the relationship, so unlike Model A, the project isn't a program that belongs to the fiscal sponsor, but the fiscal sponsor chooses to further its own tax exempt purposes. Like Teresa talked about, is it a fit for tax exempt with their own charitable purposes? They're doing it indirectly by giving financial support to another entity or a person for a specific project that the sponsor believes, reasonably believes will further the sponsor's charitable goals. So it's a grant-making relationship. And there's several steps that you go through just to quickly run through them. So typically it should be a written grant request from the project to the fiscal sponsor describing the program. The sponsor evaluates the grant proposal to determine whether the project is charitable for the first place and carries out the sponsor's purposes. And the sponsors, and Mckenzi, of course, you can talk about this, the practicality of it at length, but the sponsors board then reviews and approves the project. Should be like a board resolution about how this is going to work, what the funding is going to be. Then there's a written grant agreement with all the terms and conditions, and maybe we can talk later about a good agreement for fiscal sponsorship purposes. Then the project and or the sponsor solicits funding, and again, the bylaws, the agreement of the fiscal sponsor need to give the sponsor discretion and control over use of the contributions. Fiscal sponsorship sponsor receives gifts. They take it into their own income, and then they disperse grants. Very often what works well is if there's a restricted fund inside the fiscal sponsor for this purpose, and then the project needs to report back to the sponsor from time to time about how the money's been spent, the progress toward the charitable goals. So again, it's more, I'm going to say loose, but I don't want anybody to walk away thinking, we can just do our own thing. We're our own shop, and we don't have to abide by any rules like on your Model A. That's not the case at all. But one other thing before I hand it back off, I think sometimes, and Teresa alluded to this, the difference between just having nonprofit corporation status and actually being a charity. So I could go today to the Ohio Secretary of State and file articles of incorporation to create an Ohio nonprofit corporation for pretty much anything I want to do. Let's just to say eating turkey sandwiches on Thursdays. I could set up a nonprofit corporation for pretty much whatever purposes I want. Thursdays when it's raining. That doesn't make you a charity in the eyes of the federal tax law, able to receive tax exempt or tax deductible contributions, or to receive grants from easily from grant making foundations. There's a second step, which is much bigger, which is that you apply to the IRS on a very lengthy, involved form, typically, if you're of any size, that asks you a million questions that you have to make sure you're complying with the federal tax law, and you sign it under penalties of perjury. So it's an important legal document, and then you have ongoing, as a charity, you have ongoing reporting responsibilities that Jessica could talk at some length about. So again, if you go to like Teresa or GCAC, you say, we're a charity, we are a nonprofit corporation. No, that alone doesn't get you there. So and that's probably why you're going to community shares or to GCAC, is because you haven't actually achieved charitable status for income tax purposes. I'll leave it there and pass it back to you.
Yes, actually, I wrote a couple of notes because I think we're going to have a couple questions that pop up because of this. I will say from GCAC's perspective, what we primarily see Model C when people are applying through our grant programs. However, kind of thinking about these two models, if you're like, hey, let's just say you're a dance troupe and you're going to be existing hopefully forever, and maybe someday you're going to become a nonprofit or you're going to evolve into something else, and you're like, I'm going to produce as a dance troupe these series and seasons and do all the things that maybe a nonprofit dance troupe would do, that you might be looking for a comprehensive, that Model A fiscal sponsor, because you're essentially operating long-term with the hopes of growing and fundraising and selling tickets and renting venues, etc. So that might be an example where you are looking for that long-term. Where if you're doing a one-time project, I see a couple people on here might be doing public art or festivals. You're like, I have kind of, this is going to happen, I'm going to accomplish it, and then we're going to dissolve. So I know I don't want to form a nonprofit because I don't have a long-term goal. I have one project that has an end date, even if it's, not like tomorrow, but it's a year, a couple of years where I'm like, I kind of just I'm getting a grant from GCAC, or I'm getting funds from Community Foundation or somewhere else, or I'm going to raise a few, private dollars, and I need it to channel through a nonprofit. But we don't want to say, don't forget, launder, bypass, all of those very fun words of, it's not just a pass through. That Model C, they're really going to be involved in your project, and they're going to help guide you. So we ask, you'll note when in our fiscal sponsor requirements, we ask that all fiscal sponsors are involved in some way, because we want to follow that Model C from this book, and it's not a pass through. So that's something that we're going to look for when you're applying to us, is that the nonprofit can truly guide you, can help you, and again, with contracts, insurance, liability, all of those things that maybe as an individual artist or group of artists that you haven't had to tackle a lot on your own, that they can be, that guiding light as part of your fiscal sponsor agreement. So not just a way to get GCC dollars, although this is an avenue that we're hoping that fiscal sponsor serves you in a big way. So this is I think a good time. I saw some questions, and we'll continue this conversation as they circle back, but I did see some questions on taxes and things, which segues really well to our, we're going to go to Jessica, who hasn't had a chance to speak up yet, but we're going to talk about the fiduciary or the financial requirements of a fiscal sponsor, because this is one area I see a lot of our nonprofits who are serving as fiscal sponsors get a little confused on. So we're going to talk about how to account for money coming in and out, which Brad and Teresa hit on a little bit, how you might record it on your profit and loss or balance sheet, and then talking about 1099s, other tax concerns, sales tax, letters, etc. So wherever you want to start, Jessica, on what are those primary fiduciary responsibilities?
Absolutely. And so one thing you heard both Brad and Teresa talk about is reporting. And so it's definitely very necessary in these arrangements and agreements to be able to provide that reporting to those that you're entrusted to serve. And so, you want to be able to record the money in and out. Whatever accounting system you're using, QuickBooks, what have you, for a fiscal sponsorship, that's going to be recorded on your profit and loss statement. And so the money that comes in will be recorded as revenue. The money that goes out to the different entities is going to be an expense. And that's the biggest difference between the sponsorship and the agent, is that as an agent, it's going to go on your balance sheet as a liability. When you receive funds as an agent, it's a liability. So you're liable to hold those funds for that purpose. And then as they go back out, then it reduces that liability. As far as record keeping for if you have multiple or just for the one individual sponsorship, you can utilize, again, whatever your accounting software is, QuickBooks would have a great way to do it. I'll talk about that in a second. Or you can just create your own systems. If Excel is better for you to record the money that comes in and out and all of the different ways that it has gone out, to record the budget, all of those things, that could be a good tool. But basically just looking at your systems that you have now and tapping into whatever makes the most sense for your organization. In QuickBooks, there's different tools. I mentioned QuickBooks because a lot of the organizations do use them, and it's very popular. Class tracking could help to be able to separate, where Teresa mentioned being able to provide a profit and loss statement. You can create a profit and loss statement for just that one project in QuickBooks by using class tracking. And also QuickBooks has project tracking, which, depending on how the money funnels in and out, could also be an option. So there's a few different ways that you can do that within that system. But whatever way you do it, you just want to be able to make sure that at any given time, you can account for the revenue that has come in and what has gone out. To that point, the money that goes out, you'll have to 1099. And so making sure as you're making payments out, you're collecting W-9 forms just as you would for any other expenses, so that you provide a 1099 to whatever entity or person that the money has gone out to. Again, it goes on your balance sheet. So as a nonprofit organization, you'll record that. It will be recorded on your I-90 in the revenue and expense section. I think those will probably be the biggest things. Also, because they're tax deductions for those donors, issuing those tax deductible letters would also be important.
Fantastic. That's great to know. Does anybody have any kind of those financial or fiduciary questions? Teresa, as a person who's actually had to do some of that bookkeeping or financial, is there anything you want to chime in on, just a best practice or a tip?
Well, I will agree with Jessica. We do use QuickBooks and we use the class system. Each one of our projects has a separate class, and we're able to report out at any point in time how much money they have, what they've spent. And that, for us, that works very, very well. The one key thing that I would say that I run into more with our project and project leaders is make sure that you keep every receipt for every expense that you make on behalf of your project. I get project leaders who get very upset with me and say, well, I don't have that receipt. You know, part of my discretion and control is that I approve each and every receipt that I reimburse you for, or each and every payment that I make. So that's one of the things that I really try to pound hard on when we're interviewing a potential project is, yes, most of the financial reporting is on me, but I need the project leader's support and help in doing that, because otherwise I cannot in all good conscience say that that money went where the donors meant for it to go. So that's one that I always run into. And I think most of the time, once a leader understands, you know, it's just like when you ask for reimbursement from your employer. You provide receipts or a way to support what you're asking for. So that's one of the biggest issues that I run into as far as that. The other thing is for community shares, not everybody does this way, but community shares, we keep all of our project or our class money in a separate checking account. It is not commingled with any of our operational funds. It makes it a lot easier for our auditors when they're looking at that account because they're only looking at it as compared to each project's what they have and what we disperse on their behalf. Not everybody does that. That was a conscious decision that our board made when we set this up. Makes it a little bit easier for us, and it certainly makes it easier to pull all that information for a project.
So we had a tax question pop in about who does the 1099. So if we have, here's the artist and here's the nonprofit, and you apply to GCAC as the artist and the nonprofit is serving as your fiscal sponsor. The nonprofit will sign the contract with us and sign our grant agreement, and we will disperse funds to the nonprofit. Then they are deciding, are they paying you, the artist, directly? Are they paying every single one of your bills? That kind of thing. If they disperse to you some of the funds and it's over $600, they have to 1099 you, the artist. If the fiscal sponsors received your grant funds, $10,000, and they are paying people on your behalf, they will 1099 all of them. So the nonprofit is the person, the actual fiscal sponsor nonprofit is the person who will do the 1099 work. Did I get that right, Jessica?
Yes, unless Mckenzi, as you mentioned, if it was a scenario where the nonprofit agreed to pay the artist the majority of the funds, and then the artist pays out over $600 to someone else, then the artist will also be responsible for issuing a 1099 to that person.
Yeah, so that I do see that happen. It might not be the best practice, but let's just say GCAC. I see some of our friends from Wild Goose who has served as a fiscal sponsor, and we'll use Julie as a great example. Julie runs a wonderful theater festival. So let's just say Wild Goose served as her fiscal sponsor, and she gets a $10,000 grant from GCAC. We send the contract to Wild Goose, the fiscal sponsor. They receive those funds, they sign the contract, they receive the funds from us. And because let's say Julie has a lot of little things to buy. She needs to go to the thrift store to buy a $5 t-shirt as a costume. And she has to, she's paying someone $50 for this and that kind of thing. So maybe the fiscal sponsor is like, I can't, be paying for $5 purchases over and over. So they're saying like, okay, Julie needs to get started and purchase, props and costumes and all of these little things. They might disperse out $1,000 or however much to Julie to make all of those purchases. They would 1099 her. However, if Wild Goose said, we're going to disperse the whole amount, the $10,000, the whole grant amount out to you because you're, running around and doing all of these purchases. And what Jessica just said, and you're paying, let's say, an actor or a director or someone else part of that theater group more than that $600, then you now have to 1099 them. And so one thing you might think of as an artist is, what things do you want your fiscal sponsor to handle and what things do you want to handle? So if you're just, again, you're being reimbursed for very small purchases, like which happens a lot in the performing, you might be buying paintbrushes or props or things like that, where the fiscal sponsor is not going to physically be buying all of those. You might want to, consider that I'm making these purchases, but for big contracts, like we're paying the venue or we're paying, our directors, actors, our artists, our curators, those kinds of folks, you might want to say, hey, because the fiscal sponsor is equipped to do the 1099s and to track all of these things, you might ask them to do that instead.
And I just mentioned, Mckenzi, I think there was a question also about the taxability of, receiving a payment in one of these arrangements. And so just as a backdrop, and this isn't me making stuff up, it's or Teresa or you or Jessica, we're channeling again the tax law here. So there's a section of the tax law that basically says if you're getting paid to do something, if you're getting any kind of payment, you start with the assumption that it's income taxable to the recipient. So if I'm this is a highly hypothetical situation. If I am being retained to do an interpretive dance or to put on some kind of bit of drama. Again, you would never do that. You would never ask me to do anything other than sit here and flap my mouth about the tax law, and that can get tiresome after an hour and a half. I can tell you, I know. But just so let's say you did. Well, I, in all likelihood, am going to have to bring that in as gross income on my own IRS Form 1040. Now, if Teresa or Mckenzi or any of your other favorite fiscal sponsor people are telling you this, they're your best friend by telling you this. They're not explaining some position of the fiscal sponsor or trying to stick it to you by forcing you to pay to report this income. It really is the tax law speaking. Unless you find they're very, very limited specific exceptions to the general rule that anything you get paid to do is taxable. So just assume if you're receiving a payment, certainly if it's to actually perform some service, that goes on your IRS Form 1040, just like your day job, making donuts or doing plumbing or dentistry or whatever. It's the same kind of payment for your own personal income tax purposes. Sorry don't shoot the messenger.
This is actually another good example of how your fiscal sponsor is truly a partner for you as an artist. So I actually going to jump questions. We're going to talk about contract at the end. But I see a lot of artists on this call. Let's talk about, again, when artists need a fiscal sponsor, and then what should an artist look for when they're looking to see who should be a fiscal sponsor. So I'm going to start with saying one of the reasons you might want a fiscal sponsor and talk about GCAC project support. So I do want to note first is GCAC cannot serve as your fiscal sponsor if you're receiving any support from us. And I will say generally, because I see our accountant is on this call, we don't take a lot of fiscal sponsorships on. One, because we don't have the staff capacity to do it. And two, because we are involved in so many projects here in town. And so we can't commingle that. So there's a couple of rare cases, but really when you're looking for a fiscal sponsor, think outside of GCAC and then come to us for funding. So that's our primary role here as a grant maker. And so the most common reason that we see artists need a fiscal sponsor is to apply for project support from GCAC. I believe there are maybe a couple of grants at Ohio Arts Council and a few of our other funders that allow for fiscal sponsor people to apply for their grants with a fiscal sponsor. But we see that a lot in project support. So we won't go into all the details of project support. Our guidelines are on the website and we'll have 2023 guidelines out within the next week. We do workshops on all of this. But essentially, we want our requirements for a fiscal sponsor, and this is again not the law, it's our grant guidelines, say that your fiscal sponsor has to be local. So you could hypothetically, if you weren't applying to GCAC, use a fiscal sponsor that was not local. But we require that fiscal sponsor is local, so we know that they're invested here in the community and that they are involved in your project and they can give you, some of that good advice and guidance. We also require that fiscal sponsors have an annual budget of at least $50,000 or more, because the reason for that is we want to see that fiscal sponsor is filing 990 taxes. And if you have a small nonprofit, you might know that if you have under 50,000, you can just mail a little postcard in. So we can't really vet the financial sustainability or fiscal management of the nonprofit unless they have a budget that's a little bit larger. So if you're a very small nonprofit and you're thinking, hey, I want to get into fiscal sponsorship, just know that you won't be able to serve as a fiscal sponsor for anybody who's applying via GCAC. So those are the two kind of biggest points we're going to ask in your application. One, for the fiscal sponsors, nonprofit 990s and their financials. So that's something your fiscal sponsor can provide, or they can log in and provide that. And two, we're going to want to see the contract. So we want to know that you're not just like, hey, I think I'd like Valerie Met to be my fiscal sponsor. We want to know you've had that conversation, you made the agreement, and that you have a fiscal contract in writing so that we can make sure all those payments happen. So that is a reason why, as an artist, you might look for a fiscal sponsor. So I'll let everyone else chime in about when an artist is asking someone to be a fiscal sponsor or looking around for a fiscal sponsor, what might they be looking for? No one chimed in. I will start with like maybe financially sustainability. So you want to know that they have good bookkeeping practices. If you've heard a lot about that tracking and the taxes and all of this, you want to know that that nonprofit has good, strong bookkeeping practices. So that's something you could ask them, like, what are your bookkeeping practices? What are your policies? Those kinds of things. You might want to ask, like, who is my contact at this fiscal sponsor? Like, who will be, if you're in like Teresa's case, signing contracts, or who can I reach out to about, you know, looking at our accounting, what's gone through. We also suggest kind of that mission focus, thinking about, it doesn't have, we don't require this as our grant guidelines, but like if you're, I see the wonderful Jane D'Angelo is on this call. So you might be a dance troupe, and you might say, hey, I'm a dance troupe. Well, I want to like find someone who's very mission aligned, and that's one of the best practices. So you might say, I want to call up Ohio Dance because they've been a great partner for me. And so it doesn't always have to be like theater, dance, visual, but you might want to think like, who is doing something in the community and who might understand my project? Because if you use like, say, Health and Human Services fiscal sponsor, and you are a dancer, theater, a musician, sometimes, you know, human services and artists don't have the same needs and they might not understand all of the purchases that you're making and all of your needs. So that might be something that you would consider.
Yeah. I would say to that point, the fiscal responsibility is just huge. Teresa made a great point about the separation in the bank account. Doesn't always have to be that way, but that is a great idea. But that might be something that you want to understand. How are the funds physically managed in the account, and how do you make sure that those funds stay allocated to that project and are not spent for any other purposes? And then also knowing what the payment or accounts payable process is for that company or organization, because some organizations don't cut checks but like twice a month, or, you know, just making sure that you understand that overall you guys are in alignment with the frequency of the payments, where the money's going. All of those things would be important. I think it's probably heavy on the fiscal side when you're looking to develop that relationship.
That's why one of the reasons we're actually having this panel and workshop is so that also the nonprofits who are taking on fiscal sponsorship really understand what they're getting themselves into, and knowing that it is a big responsibility and that there are a lot of accounting and legal considerations. So I saw a couple of questions come in. I'm going to start with Amy's question. For GCAC's project support grant, can an organization serve as a fiscal sponsor for multiple artists or projects in the single grant cycle? Yes, we have no limits. So if there was some, let's say, you know, after this, you're like, hey, I think community shares is a great fit for me, and multiple people called Teresa to be a fiscal sponsor. We have no limits on that. So we do see a lot of repeat fiscal sponsors. And the reason for that is those are folks who are prepared and have had this process in place. So that is very common. So no limitations there. Then we also, Lexi asked, what is the advice for establishing a fiscal sponsor relationship if you don't have a relationship with that org already? So one of the things, we get that a lot at GCAC, there, people hear, hey, you can apply with a fiscal sponsor, but I don't know who could be my fiscal sponsor. We can provide you a list of folks who have served as fiscal sponsors in the past. We don't actually, you know, recommend or endorse anyone, because it's really up to you and that nonprofit to make a strong contract and agreement, and for you to vet that nonprofit. But a simple email will say, hey, do you provide fiscal sponsorship services? To start the conversation, here's a project I'm looking to do, a few bullet points to someone you think is a good fit, could work out really well. And then they can just respond, hey, no, we don't do that, but maybe so-and-so does. Or they might say, hey, yes, we would consider serving as your fiscal sponsor. So that would, and then you start the dialogue, and they might say, hey, we need this and this and this from you. Like Teresa mentioned, they have certain requirements. Some fiscal sponsors like to have that in-person meeting to really talk through the project and make sure they understand that kind of thing. And then we just had one, Lynn asked, Ohio sales tax, question mark. I'm not sure what that question is referring to, but let's talk about sales tax implications, Jessica.
Well, for the sales tax, for the fiscal sponsor, the exemption should extend with the expenses that are paid out of that, just like for the 990, especially with mission-driven expenses. If the, an example of the money being passed to the artist and then the artist paying things out, then the artist would be paying the sales tax because the artist doesn't have that exemption.
So let's talk about what should be in a fiscal sponsor contract, because we've talked a lot about contracting. So we're going to hit some high points. We can't provide a template because every agreement's going to be so different, but we are going to talk a little bit about the high points, what the terms might be, the length of the agreement, administering funds, fees, who signs contract, all of what if the project goes away or dissolves or, that kind of thing, what happens. So that's something, again, no one should get into a relationship without a contract. So everybody knows what the artist or the group of artists and the fiscal sponsor is agreeing to. So who loves talking about contracts? I see Brad smiling. I mean, I guess you're an attorney, so you have to do this. But then Teresa can do some practical implications too.
Sure, I bow to Teresa and Community Shares of Mid-Ohio for their day-to-day work in the trenches on this. So I think we need rapid follow-up from Teresa talking about how it all really works and the dynamic and all that. So again, just to, Teresa or GCAC, if they're acting as a fiscal sponsor, if they're asking you to enter into a detailed agreement, don't hate on them. Just don't hate generally. Is my advice to you, but especially in the fiscal sponsorship context, it's important to have a written agreement laying everything out. That's just a good thing generally in life, is to have a upfront in a relationship, is to have an agreement, that any kind of transactional relationship, an agreement that lays out how things are going to work. If you can't agree up front when everything's, friendly, what's going to happen when there's a dispute? So among other things, the agreement's, going to provide that the project, the individual or the organization that's the project has to use whatever they receive from the sponsor for the project that's described in the proposal and the project budget. That shouldn't be any surprise, right? If you're a project and you present a proposal, you shouldn't be surprised if you get a grant and you're asked to use it in accordance with the proposal that you yourself made. It can define how any kind of advisory committee is going to work. I think Teresa used the word team. It might well say, that who's authorized to solicit gifts. And one really important thing is for the sponsor, because the gifts are being only tax deductible or grantable by a grant-making foundation if they're going to the charity sponsor. So the fiscal sponsor charity very well should have in the agreement that they get to review any kind of fundraising material. It should define the admin fees, any other kind of administrative fees. It might say that if it's a Model C relationship, that the project people are not agents or legal representatives of the sponsor. That it should say something about the reporting that the project has to do back to the fiscal sponsor. It would likely say put limits on how much can be used for lobbying as defined by the tax code. There's a flat prohibition under the tax code for charitable dollars being used to intervene in any kind of political campaign for or against a candidate. So that's a typical thing to put in there, that shouldn't happen. So those are some of the highlights. Might talk about any publicity. The sponsor, would likely want to have the ability to see that in advance. And then, don't be surprised if the sponsor wants to be able to talk about this in their own publicity, and their own kind of press releases and newsletters, annual reports, that kind of thing. There might be an indemnification provision to protect the sponsor from, really bad things that the project might do. Could happen. Anyway, there's some highlights, and love to hear from Teresa and Jessica about, what they've experienced, working with people day to day.
I would say, I mean, everything that you just mentioned, Brad, is in our agreement. We lay it out so that there's no unknowns on behalf of the sponsor or the project. The project knows everything all along the way. The one piece that we do add, because experience is a great teacher, is that the project will only do the activities that it agreed to do in the initial agreement. If there are to be other activities, if you're going to take on something else, that has to be with the sole written permission of the sponsor or of Community Shares Informed. So you've told us what you're going to do. You stick to that. If you have another idea, it doesn't mean it can't be done, but it does mean you have to come back to us and we have to do an addendum that says, yes, you can also do this activity. As Brad says, we spell out all the fees, we spell out what insurance is provided to each one of the projects, because we provide blanket liability insurance, workers' comp insurance, any project that may be a higher risk project, i.e. working with children, transporting people, those may require different insurances. Those are done at the expense of the project. We help secure insurance for them. We work with a couple of what I call human service and social sector insurance agents. They're skilled in looking for these things, because a lot of the times those insurances are not easy to get. So we do spell that out, that the project has to cover anything that's unusual or over what we normally would. And then the last thing that we really spell out is how the project ends its work. Mckenzi referred to it may be one project, you're going to do it for a year and it's going to end. There's money left over. How does that get dispersed? To whom? Under what guidelines? You've decided that, okay, we're doing what we want to do. We think we can handle this. We want to become a 501c3. You apply to the IRS, and once they've given you their letter of determination saying, yes, you may file as a tax exempt organization, then we're permitted to turn over any leftover funds to that new entity. The third is you just decide Community Shares is not the right fiscal sponsor for us. We just, we don't see eye to eye. We'd much rather go with GCAC. Then we will create a letter of transmission between ourselves and the new fiscal sponsor, which may be GCAC, that we are turning over X amount of funds that were given to us to be used for X. And then GCAC would sign off that they're accepting that project to be fiscally sponsored. I know you don't do fiscal sponsorship. I'm just trying to make it easy. So it's spelled out again in a letter that we're transferring funds that a donor or a grant maker has given us for what purpose, and then turning it over to another sponsor. Those are the three ways in which we can turn loose of any funds that have been given to us on behalf of a project.
Yeah, so that's something to think about, is that the funds that are granted, let's say from GCAC to your fiscal sponsor, technically the fiscal sponsor owns those funds. Like they don't belong to you, the applicant. So it's just, that's again about that partnership, how you're communicating these are being used for the project. So Amy had another clarifying question about those contracts. And she asked, essentially the artist or the group of artists finds their fiscal sponsor and does their agreement or their contract first, because we require that you upload it to the application. And then once you've gone through the GCAC process, we have a contract that we call a grant agreement that will be sent directly to the fiscal sponsor, and you'll be able to view it, but it will only be signed by the fiscal sponsor. So if you get just a regular artist grant from us, you will sign a contract that says, hey, we're giving you this much as an artist grant, and these are all the terms. And we just send that money right to you. But if you're coming for project support, you are using a fiscal sponsor. We are actually making, us as a funder is making the contract with the fiscal sponsor. So that is our contract. And we're just viewing the contract that you have with your fiscal sponsor to make sure it's in place. So yes, your question was, yes, you start with finding that fiscal sponsor, making that agreement, joining, having a written signed contract. Then once you're approved for GCAC funds, we're going to send a contract to the fiscal sponsor. Did that clarify it, Amy? Then we have, we've got a question about taxes. What if the artist wants to sell products? So let's say you're an artist who's doing a small arts festival with a bunch of visual artists, or you're running a curatorial series and you want to be able to sell your work, your artwork. Can you touch a little bit on sales tax, Jessica?
Yes, that's going to be important when you are determining what organization that you're going to work with to be your fiscal sponsor, because that organization is going to be responsible for compliance with sales tax laws. And so depending on the length of time that you guys are selling and other things, it may be very likely that the organization would need to have that vendor's license and remit the sales tax. And so again, from the organization standpoint, if they don't already have that, that's something to consider, because that's additional work and responsibilities. But that will be the responsibility of that fiscal sponsor.
I will say, speaking of sales tax, all of our grant workshops and our topical workshops are recorded and uploaded to our YouTube channel. And we've had some great recordings for taxes for artists. So a little unrelated to fiscal sponsorship, but since we're talking about sales tax, that always comes up in the taxes for artists workshop. So if you're thinking like right now, like, oh gosh, I haven't really thought about sales tax, I recommend to circle back to that workshop on our YouTube playlist. We had a question from Lexi about fiscal sponsorship related to GCAC grants, asking if they could use a national arts organization located in another state. Per our grant guidelines, you cannot. Just for GCAC, I can't speak to any of the other funders here in town. You do have to use a locally based fiscal sponsor. And I'm gonna use a very sad and tragic example of why we required that. Is we made an exception for somebody some years back, and they used an out-of-town fiscal sponsor. They met all the other requirements, and they actually came to us and they're like, hey, where's our final payment? And I'm like, well, we sent it months and months and months ago to your fiscal sponsor, and they never could get a hold of that fiscal sponsor again. They dissolved. And that was a real extreme example, but having a local fiscal sponsor has a more likelihood that they're known to us, or we have a relationship with them, and that is more for your protection. So just for our guidelines, we want someone to be here and locally so that they can be involved in your project. That is just a GCAC requirement for the application.
Mckenzi, I'm just curious, how do you define local? You mean like Franklin County, or?
We're deliberately vague. I know attorneys hate that, but I would say, Central Ohio. So not Cincinnati or Cleveland, but Columbus or any of the surrounding suburbs. All right.
I would tag on to that, Mckenzi, that if you are a project looking for a fiscal sponsor, one of the things that you will want to ask the fiscal sponsor is, where are they recognized as being a fiscal sponsor that can be granted money? For instance, Community Shares, we handle grants on behalf of the City of Columbus, Franklin County, the State of Ohio, Department of Education, and we're also recognized, we haven't yet, but we're recognized and could handle federal grants. So that's a question you would definitely want to ask a potential sponsor, is who are they able to do business with, because each one of those requires a separate, I'll say, vendor license, but I have to work with the City of Columbus on establishing on their vendor portal and all the information that they require for that. So I would ask that, and I'm going to tag on that, go a little bit off topic, but if you are a nonprofit that's looking to become a fiscal sponsor, I strongly urge you to sit down with someone who's doing fiscal sponsorship in the way that you would want to do it and talk a lot of these specifics, because it is a large consumer of time. Like I said, we're overseeing 15 projects, and I would say that takes a good 60% or more of my time as the executive director. So you really want to go through some of these things and figure out how much time it takes to, how much time and how much staff you would have to devote to being a fiscal sponsor for one or more projects, because it continues to add up as you do more and more.
Yes, that's something, I'm so glad you mentioned that, Teresa. That's something that we see, is that so many of our arts nonprofits also want to help artists. So they're like, yeah, I'll be your fiscal, they're like, yeah, I'll be your fiscal sponsor. And we know that many organizations run on a shoestring staff, might have the executive director doing bookkeeping or be contracting some of that out, or have even a volunteer doing that. And, you know, thinking about just even the bookkeeping processes and keeping it all straight and doing all of that takes a lot of time, but not just those communications and all that. So we do want to encourage our nonprofits who are well set up for this and keen on it, to consider this, to look at the book. I'm going to send an email out. Anyone who is currently an operating support or general support grantee will have access to a free copy of this book. If you're a project support grantee as a nonprofit, and reach out to me. So we'll make some of these available for those folks who want to take this on. And then there are organizations like Community Shares that have fiscal sponsorship as part of their mission. So that's something to consider. Really, any nonprofit who wants to and has the capacity to can take this on. So if you had a great relationship with Kappa, for example, and they were like, yes, we have the ability to do this and we want to take this on, yes, you can make that partnership with them. So there aren't a lot of limitations in that. We just want everyone to know on both sides what you're getting into. And fees came up. So I do want to say that fees can really vary. We see most commonly 5 to 10%, which 10% of the money that you've raised. So if you get a $5,000 grant from GCAC, most fiscal sponsors will be taking whatever's in your contract, but like 10%, they would get that $500. So that's something to kind of think about. What services, you know, if it's a little bit over, it might be because they're providing you other services. Maybe they're also doing marketing for you, or they're providing a venue or that kind of thing. So thinking about, you know, is your contract just fiscal sponsorship, or are you also partnering with that nonprofit for other kinds of services? Can think about that. And then some nonprofits will discount their fiscal sponsor rates because they believe in the project and they care, you know. So if they say, you know, we love this project, we want to be part of it, we're going to charge you only 2%. I mean, that's great, but I would say just be prepared that they, you know, will charge you a fiscal sponsor fee. Typically is percentage of the money that you've raised or the money you're taking in through grants. Anyone else want to talk about fees?
Yeah, I mean, from our perspective, you're right in the sweet spot. We are looking to rewrite some of ours to scale to the size of the project, because again, a small project that we only write a couple of checks for a month is very different than a project that we end up writing 20 to 30 checks for a month. So we're starting to look at that scalability and how that plays into it. So again, a great conversation to have with whomever you're going to ask to be your fiscal sponsor. Have those conversations ahead of any decisions that you might want to make.
Wonderful.
I wonder if it just, and I just more read about this stuff or hear about it from folks like you, but you know, I've heard, I think the fees can be, what's an appropriate fee is highly contextual. So I've heard that in some universities, if they're sponsoring, say, a big research project or something, they might take 50% because there's so much oversight needed and so much staff time, that's what they would say, staff time and effort needed, expert staff time, and needed to oversee it appropriately. So that's one context. And then I think you were saying that, you know, in some cases, a fiscal sponsor, if something's just so right in line if all the everything lines up, they might cut the fee, but it's a matter of context and negotiation from what I've seen.
And the
Nothing
one
for
other
the
piece I'll add to that, Brad, I mean, you're absolutely correct. You would also want to check with the grantor that you're looking to get grant funds from, because we hear that there are some grantors, and I'm just going to use the Columbus Foundation because Brad's there. They stipulate that they would not consider giving money to a project that pays out more than 11% of the total grant. So that's another thing. If you're looking to get a grant and a fiscal sponsor to handle that grant for you, you'll want to make sure on both sides that the fees that are being charged are within the guidelines of the grantor as well as the sponsor.
And on that note, we do not stipulate that in our grant guidelines. However, if we see like that's why one of the reasons we ask for the contract, if we see like, hey, gosh, so much is being dispersed to the fiscal sponsor. Are they taking advantage of this artist? Are they offering other services? We want to make sure that the contract is fair. And so it's just a question we might ask. And maybe we find out, oh, they're doing all of your grant writing and your marketing, and they're providing all these other services for you as like an administrative entity, that might answer the question. But if they're just like exploiting you for a lot of funds, and I hope no one would do that, but we just want to make sure that that is fair. So while we don't stipulate, we are going to take a glance and make sure it looks like that the contract is fair to both sides.
And to that point, Mckenzi, as a fiscal sponsor organization that may be above the typical range, even if you're below, really documenting your time spent and effort would be important, even if you're below, because if you're going to continue, if you're going to do another agreement or anything like that, then you can see like, oh, hey, we only took 10% or 5% or, whatever, but we really spent, when we break that down into our time, was it worth it? And if we do this again, now we know, in general, this is how much time, and then you can start to plan from there on what it may look like in the future.
Yeah, we see that a lot just because kind of like people who do one-off fiscal sponsorships. So typically that model C that have not taken it on, they do it, because they have a relationship with the artist and they love the artist project and they take it on. And then they realize like at the end, oh my gosh, this took like more time than running one of our own projects or something. So a lot of times, the fiscal sponsors are organizations who have that as part of their mission, when they're out there supporting artists or art projects out there, they see fiscal sponsorship as part of that broader mission, and they have set up, all of those policies in place for that. We had an old question that I wanted to circle back to that from Lady Extreme. Can we have multiple sponsors at different time, or do you have to the same one? Teresa hit on this a little bit. You can switch fiscal sponsors. There should be something in your contract that says how you can dissolve the agreement or when it terms out. If you have like a long-term project, like we've talked about, like I'm going to have a gallery with multiple exhibitions, or I have a theater troupe that is continuing on kind of existing as a nonprofit. You're having that comprehensive relationship, the model A. You might want to think like, I'd like to stick with someone more long-term, so you have that continuity of records and relationship and know how the processes work. If you are doing like this year, I'm doing a music festival. Next year, I'm doing a series of book reading, or like a couple of years from now, and like you're just doing, again, those kind of one time, or I've got like a cool project idea and it's changing over time. Yes, if you had a relationship with a fiscal sponsor and then next year it makes sense to have a different one, or you didn't have a great relationship to begin with, or someone's offering you different services or a better fee, you absolutely could sign up with somebody else.
Would this be the case, Mckenzi, say with maybe, I know you can't speak for them definitively, but Ohio Arts Council, let's say you're an artist, you have one project where the work's going to be conducted in Columbus, and another one's in Toledo, and another one's in Dayton, or whatever, to have different fiscal sponsors in each geographic area, that know the area and know, understand what you're trying to do in their service area.
Yeah, I think I haven't seen that, but I think that would be okay. For us, if you, let's say you're applying to funding for us for the Columbus-based projects and you were touring it to Toledo and Cleveland and all of the areas that are not under our funding purview. You could still use a local Columbus-based fiscal sponsor for all of those projects, assuming that it serves your needs. It doesn't. It's really the opposite. If you use a Cleveland-based fiscal sponsor, you can't apply to GCAC. So that's just something we're based here. We're looking to really keep it in the family here in Central Ohio. So yeah, yes, I think that's absolutely okay. It just, thinking about who your funder is. All right, I'm still keeping open for questions. Let's see, can a fiscal sponsor charge market rate to a project for use of the space? So, okay, so we have a theater company that owns their building and they rent the space out to artists. So let's say a group of artists come and say, hey, we need you to be a fiscal sponsor because we're going to do a theater production and we want to apply to GCAC project support. And we'd also like to rent your space. So can they have an agreement as a fiscal sponsor and charge whatever they charge, 5 or 10%? And can they also rent their own space to that project? Brad, you want to, Brad or Teresa?
I was gonna say, that's not one I've handled yet, so. Brad?
I don't know, why not? I mean, there's nothing like legally wrong with it. Fiscal sponsors receiving gifts, and dispersing grants for the project, and they happen to own, real estate that is designed to allow for nonprofits to use to put on performances. Why not? I would think again, you'd have some kind of, again, this is not my bailiwick in terms of knowledge and experience, but I would imagine this fiscal sponsor would have maybe a separate agreement about how you use that space, just as a matter of course. Like nobody shows up at the Ohio Theater and just does a performance because it's a neat idea and they're really talented. There's going to be an agreement about exactly when you get to use the space and who has responsibility for what. I would think it'd be no different with a fiscal sponsor. I'm thinking there's, I don't know if this really applies, but here in Columbus, why am I not thinking of the organization and the Thurber House that own space all around town that nonprofits use? I'm sure they have agreements. Anybody can help me remember the name of the organization? Terrible.
Thurber?
No, anyway, I'll think of it probably after we're done here.
Yeah, I will say, as you said, Brad, I see that a lot. In fact, especially in the arts realm, because most of the folks who are arts-based organizations are either running a gallery or a museum or a performance art space or a music venue. And so that is actually really common, is that artist might already have a relationship with that organization or that venue, or they said, oh, this would be the perfect venue for this event. Then they get to talking with that venue and say, hey, we also need a fiscal sponsor. So I have seen it. I wanted everyone to weigh in that you have your fiscal sponsor contract and then you have, a regular venue contract.
To tag on to that, one last piece that a project will want to be cognizant of, and or the nonprofit, if they're going to serve as a fiscal sponsor, is if the project is soliciting funds from outside of the state of Ohio, it may require that the nonprofit be registered in other states. We're actually registered in 2 other states in order to receive donations. So registering with another Secretary of State may be required to receive, or that's actually the AG, to receive contributions. So that's a part of the conversation that you would need to have either way. Make sure that the nonprofit can, or if you're going to be the nonprofit, are you ready to register with another state in order to handle those kind of donations?
Absolutely. Lexi had a question about recommendations for artists running programs in rural counties that might not have a lot of fiscal sponsor opportunities. So when I say like you must use a local fiscal sponsor, that's just for GCAC. So if you're running programs in rural counties, you can use any fiscal sponsor you like. You can use one here locally, you can use a national one. There are a few folks nationally that do fiscal sponsorship. Many are directed for artists because that is, in fact, fiscal sponsorship. 6 ways to do it right that we keep talking about in Model C. The first paragraph is all about artists, or the second paragraph, because it's such a common thing that artists use fiscal sponsorship in the Model C way. So if you're running in a rural county, you're actually not going to be qualified for GCC support because all of our projects have to happen here in Columbus. So you can use any fiscal sponsor. So I've just to clarify again, that like local fiscal sponsor is only for our funding. So if you just need a fiscal sponsor to raise dollars to get funding from another entity, you can use anyone you want that, you feel really good about and has, meets all these qualifications. All right, we're getting near our time, so I just want to give anyone the opportunity to drop any more questions into chat, or if anyone would prefer to come off mute and ask any questions while we're wrapping up. So let's each of the panelists, let's hit a high point like of something that taking away just like a nugget of information. So I'll start. Don't use fiscal agent, use fiscal sponsor. What we've been talking about all day today. And when you're applying for GCC funds through project support, you have a fiscal sponsor. You're in a fiscal sponsorship relationship. Fiscal agency, no. So I use Brad's little symbol. So I stole one for you, but if there's something like, gosh, don't forget if you have a takeaway.
I'll jump in and I'll say just good record keeping and making sure you have that oversight on both sides as the fiscal sponsor, making sure that you have that information, but then as the artist or the recipient, making sure that you are holding them accountable, getting that document, and also having your own set of records so that you guys can reconcile and make sure everything aligns.
I'll go next.
Go ahead.
Buzzkill lawyer time. So it's great. I think, absolutely, if you have a project and you're looking for fiscal sponsorship, it's important, necessary to have passion about that and have a great idea. If you're looking for fiscal sponsorship, though, that by itself is not enough. You got to be organized. You have to understand that the fiscal sponsor needs to exercise discretion and control. We want to have an agreement. We'll want a firm proposal. This is the boring side of it, right? It's not as exciting as doing the community garden or putting on the performance, that kind of thing. Totally get it. But these other things, it's not, again, it's nobody who's trying to just exert control for the sake of exerting control. It is a function of what our regulators have told us has to be the case. So have patience with the boring.
And then what I would add to is whether you're on the sponsor side or looking to have a sponsor, make sure you interview just like you would and prepare for a job. Make sure you're talking about all the nuts and bolts and read the agreement and make sure you understand what you are obligating yourself, your organization, and your funding to.
We had one final question in the chat. Can we follow up with more one-on-one questions? So I will say you can come to me for grant related questions. So if you were like, hey, I've heard this, I have some questions about fiscal sponsorship applying to GCC funding, absolutely reach out. I am not a legal or financial expert, so I can't give you legal or CPA kind of advice, but I can tell you how to use fiscal sponsorship to apply for grant funding. So all of our GCC staff, all of our grant staff is on this call. Many of you know us very well, Allison, Davon, and myself, and we will be here. I will drop into the chat right now our general grants email. You will also receive a follow-up email from us with the link to this recording. I will share the link to this book and tell you about all of our other resources coming up. All right, with that, I'm going to go ahead and stop the recording and thank everyone from being here. And if anyone needs to stay on and ask me any questions, I'll still be here.